All right, so now, if more banks go bust, we'll have another crisis on our hands. On the other hand, the profits numbers are very good. I want to ask if these banks can survive. Let's go right to our guest. We have former FDIC chair and author of Senseless Panic, Bill Isaac, along with Bill Bartmann, CEO of debt advisory firm Bartmann Enterprises and the publisher of the Bartmann Bank Monitor Report. Bill Isaac, start with you. Banks are more profitable now than any time in the last 3 years. Are they in good shape? Are we in a financial recovery? Because the bank stock index was down, I think, almost 11% in August alone, Bill, and the stock market is a leading indicator of something. What do you think?
Well, I think the banks are a mixed bag. We certainly have a steady stream of bank failures, and that will probably last at least through the end of the year, depending on what the economy does. And on the other hand, we have banks that are healing. Many banks are earning a lot of money now, or they're starting to come back in terms of profits. Those numbers are pretty impressive. The 21.6 billion, I think it was, in the last quarter. Those are pretty impressive numbers. The banks are getting far more liquidity. They're strengthening their capital. So I think the banks are in a position to lend. Right now, there isn't a lot of lending going on, and I think that's just lack of loan demand.
All right, so Bill Bartmann, you heard Bill Isaac give a positive view. But, Bill, bank stocks got clobbered in August, and I'm worried about that. What's your take on the banking story?
I think, for Larry, what we're going to see right now are more bank failures rather than fewer bank failures. And I do agree with Chairman Isaacs, and I do agree with the Chairwoman Bear that some banks are improving, but it's a bit Darwinian. Those that are going to make it are, in fact, getting healthier, but those that aren't are really, right now there's about 1/3 of the banks, if we take Chairman Bear at her word, said 2/3 of the banks have showed improved results, meaning 1/3 did not show improved results, and 25% of the industry is, quite frankly, severely injured at this point.
So, Bill, just quickly, what happens if we have a double dip in housing prices? What happens to the bank's mortgage-related assets?
Which bill are you referring to?
Bill Bartmann, you start.
Thank you very much. If the double dip occurs, and there is some evidence that it's on its way, that quite frankly the banks that are weak are really in deep doo-doo, and I'm probably the most optimistic guy you're ever going to meet. But the facts are the facts. The last 4 quarters now, 25% of the banking industry has been unprofitable. If the economy doesn't turn around, they're going to die by attrition. So they're dying by a death of a thousand cuts.
Well, Bill Isaac, I just worry that the stock market plunge by the banks in the month of August, a big number, it's close to 11% if I'm not mistaken, is a function of worries about bank toxic assets in the mortgage area if the housing does double dip in price. And secondly, Bill Isaac, commercial real estate. You got a lot of bears about commercial real estate, and there's a lot of commercial real estate mortgage paper held by the banks. What's your take on those two areas?
Well, I think the bank stocks probably are suffering because people fear we're going to have, there's a chance that we're going to go into a double dip recession. And if that happens, there's no question that we're going to have more problems and more bank failures. I would say that so far there are no surprises here. We've had about 325 bank failures over the past couple of years, and I think, and that's if the failure rate continues at the pace it is this year. It'll be about 325 failures over the past couple of years, and I think it's 3 years, and that's what I would have predicted. That's what I did predict a couple of years ago.
But Bill Bartmann says another 1,000 banks could go down if real estate turns south. He said 1,000 more banks. That's a big number, Bill Isaac, even for you.
Well, people have been saying, tossing around those kinds of numbers, and it hasn't happened. I don't believe it's going to happen unless the economy tanks again. And if the economy tanks again, all bets are off. But
all right, Bill, he just dissed you. Bill Bartmann, you just got dissed by Bill Isaac. Now, I've been dissed by Bill Isaac down through the years, too. What's your response to Chairman Isaac?
Number one, I take it as a compliment. Number two, I do agree with them. If the economy were to heal, then quite frankly, the curve we're on for bank failures probably will continue at the pace he's suggested. But I don't think any of us see that happening, even if there's not a double dip. if this economy just continues to lag and stay flat, then quite frankly, we're going to have a substantial increase in the number of bank failures.
All right, Bill Isaac, last one to you. I only got 25 seconds. Robert Herz is leaving FASB, the Financial Accounting Standards Board. Is that bullish? Does that mean no mark-to-market for loans and securities? Is such a thing possible?
I sure hope so. I'm glad they're making that change, and I'm also glad that they're increasing the FASB board from 5 to 7, and I hope that FASB will get under some adult supervision here once they expand the board and get a new director in there. I'm just a new chairman in there. FASB's done an awful lot of damage.
Why don't you take it? Why don't you take it? Come on, Bill, take it. You should be the head of FASB.
I thought you were my friend, Larry.
All right, we're going to get out of here. Bill Isaac, thank you very much. Bill Bartmann, thanks. Up next on Kudlow.